Hi, this is Scott Varilek here with you, Varilek Trading. Thursday, January 27. News is pretty much similar stories that we're watching from previous weeks. Trying to monitor the daily slaughter numbers real close, see if we can start to see any kind of pickup there. We're up to about 118,000 a day, so it's better than the 115 it was, but sure would be nice to have that 121,000 a day. So we're picking up a little bit, so that's okay. And we're getting closer to spring. I think there's going to be a little bit more of a desire for the packer to want to get some numbers. But right now, since we feel like, hey, we might be a little bit tighter, we aren't overrun with numbers on the show list. It's maybe easier for them just to slow the chain speed down a little bit anyway, and to kind of keep these price levels where they're at, because there'd be a risk of them to go higher if they ran out there for cattle to try to buy out the cattle. We're maybe in a tighter spot. So packers using as leverage, buying cattle for 3 weeks out. Cash bids have been fairly steady. 218 in the meat, 137 live, maybe a little 138 to some regionals, and then there was some 136 in the south as well. So that's been pretty flat. I think guys were passing 218 the first couple of weeks that came along, and now more and more are starting to buckle. Okay, it's time. These cattle got to go. Gains are amazing when you have some of these closeouts coming in and everything's gaining better than expected, putting a little bit of extra weight on the market. But the 2-week-old data that we get on the carcasses shows that we were down 6 pounds on steer carcass weights. So that's a great sign. We had been 10, 12 pounds higher than year ago levels. Now narrowing that up a little bit, that's going to help us moving forward as we see. Maybe we are more current than we think. We just can't seem to get any leverage over the packer. Fewer negotiated traders as we move along through the years has kind of set us up for this scenario. So just taking what we can, the only bid that's out there. One side note to watch, US dollar really breaking to the upside here. Some of the charts where the dollar's as strong as it was in July of 2020. And that's the last time it was this high. So that's a year and a half ago. And what happened when that dollar really started getting a lot weaker? That's when our grain demand was amazing. Shipments to China, we went to $7 corn and $15 beans, and so I'm a little bit nervous about that. I'm watching that, seeing if that'll affect the grains. A lot of traders seem to be just writing that off, saying I'm not worried about it. No, they're not correlated. But to me, yeah, I think that's something that's going to shake the funds up a little bit. If we continue to see that dollar itch to the upside, it's going to make our grain just look that much more expensive. And there's a lot of outside market news that certainly has everybody a little bit nervous. You got Russia, Ukraine, and Dow Jones flying all over the board. That can keep the funds at bay just a little bit. So a little bit of extra nerves before they want to really enter into a market heavy. So questions, give us a call. Varilek Trading. The risk of loss in trading futures and/or options is substantial.